Neil Patel, market won't work anymore. Let me see. I need to start email marketing, I think. Okay, so we're going to start off reading Ask and It Is Given. I am Natasha Telfair, CPP. I will be your instructor today for CPP studies. It's really me studying to take the exam again instead of doing my continuing education hours of 120 because I ain't did them in the past 5 years. So I decided to retake the exam and I decided to bring you all on my journey. But before we get started, let's have a reading of Ask and It Is Given. And this is going to be chapter 15. It's a very short chapter. You are a perfect yet expanding being in a perfect yet expanding world, in a perfect yet expanding universe. It is important that you know these things. You are a physical extension of source energy. The physical world you live in provides a perfect environment in which to create. The variety that exists helps you focus your own personal desires or preferences. When a desire is focused within you, the summoning of creative life force immediately begins to flow toward your desire, and the universe expands, and that is good. Your conscious realization of the creative process is not necessary in order for it to continue. The leading edge environment that you are physically focused in will continue to stimulate new desires in all who participate. Every desire or preference, no matter how large or small it may seem to you, is understood and answered by all that is. As every desire from every perceiver is answered, the universe expands. As the universe expands, the variety expands. As the variety expands, your experience expands. As your desire expands, your desire expands. As your desire expands, the answering of your desire expands. And the universe expands, and that is good. In fact, it is perfect. You live in an eternally expanded environment which constantly causes newly focused desires within you, which source immediately and always answers. With each receiving of that which you are asking for, you achieve a new vantage point from which you spontaneously ask again. And so, the expansion of the universe and your personal expansion will always be as follows. You live in an expanding universe. You live in an expanding physical world. You are an expanding being. And all of this is, whether you consciously understand it or not. This universe is eternally expanding, and so are you. And that is good. Consciously participate in your own delicious expansion. We eagerly offer our perspective to you for one reason only, so that you may consciously participate in your own delicious expansion. Your expansion is a given. The expansion of your time-space reality is a given. And the expansion of the universe is a given. It is just ever so much more satisfying for you to consciously and deliberately participate in your own expansion. That is chapter 15 reading of Ask and It Is Given. And now we are going to jump in to the purpose of today's live, which is to share certified payroll professional training if you decide you want to go get your FPC or CPP certification. I am Natasha Telfair, CPP. I'm a certified payroll professional, which I have been a certified payroll professional for over 10 years, but I have been working in the payroll industry for close to 20 years. Look at that. Look at that. So from there, we're going to jump on in. Welcome, YouTubers. Welcome, TikTokers. I have decided to invite you all on my journey. For some reason, I decided to take the exam again. Not some reason. I didn't do my continuing education hours, and you have the option to do 120 continuing education hours over a 5-year span or to retake the exam. And I'm decided to retake the exam. And I decided, hey, let me have the collective, the butterfly collective, study with me. So With that said, without further ado, I'm going to check my schedule just to be sure I don't have any meetings scheduled for today. And I do not. So we're going to jump right on in to section 1, which is the employer-employee relationship. Now, I do need to, I need to do some adjustment to my desk real briefly. Sorry about this. I should have did this already, but I want to be sure that I have in focus any questions that might arise. Hey, T-Ba. From people that are joining in, because again, this is a collective study of the certified payroll professional exam that I'll be taking. So I want to be sure to move my YouTube audience over so I can see you guys, and I can see you guys pretty well over here on TikTok. If you guys can like, share the live, it's greatly appreciated. If you have questions at any moment, please feel free to ask. This is what I do for a living. I've been in the industry close to 20 years, as I said, and let's go ahead and jump in. And I'm reading directly from the payroll source. And as needed, I'll kind of just give some background clarification. And I'm doing it not so much for you all, but for me, just to regurgitate everything in my mind as I prepare for the exam, which the exam dates are in September of this year. And the exams are proctored. And taking the CPP exam is just as hard and grueling as it is to take a CPA exam. So take what resonates and leave what doesn't. So the employer-employee relationship, perhaps the most basic decision an employer must make when hiring a worker to perform a service is whether the worker is an employee. Not all workers are employees, and the employer's determinations affects the entire relationship between the employer and the worker. Hiring employees gives the employer the benefits of controlling the methods and results of the work to be done, having full-time workers who work only for the employer, and having workers who have been trained by the employer. So number one, if you control the work, you control the time, you control the resources, you have an employee. So if you're hiring people as a 1099 and you want to have all the control, you have an employee. You do not have an independent contractor, and that's going to be a strike if you ever get audited by the IRS. So pay attention. The employer-employee relationship also brings obligations, income and employment tax withholdings, unemployment insurance contributions, workers' compensation premiums, etc. This section examines the criteria that determine whether a worker is an employee, as well as the employer's obligations once the employer-employee relationship is established, and the penalties resulting from misclassification of a worker as a non-employee. What that means is, if you are audited by the IRS and you labeled someone as a 1099 contractor, which means they work for themselves, you ain't got nothing to do with it, and the IRS says that you are they're actually an employee, all that money you thought you was saving from paying the Social Security, the employer portion of Social Security and Medicare tax and your state unemployment insurance, you got to go back and pay all of that. But not only do you have to pay that, you got to pay it plus taxes. I mean, let's see, plus penalties and interest. So it's better to classify a person correctly in the beginning than to try to get over. Because I promise you, it never ends well for people that try to make someone a 1099 contractor when they're supposed to be an employee. This section also outlines an employer's obligation to determine whether a newly hired employee is eligible to work in the United States under U.S. immigration laws, and the requirement to report new hires to state government agencies to aid in their effort to enforce child support obligations and prevent fraud in obtaining unemployment compensation, workers' compensation, and public assistance. A lot of people do not know all of these government agencies, they talk to each other. When you report something to the IRS, it is also being reported to the SSA. And guess who taps into the IRS and the SSA database? Your state agencies. And that's how a lot of people get caught up with workers' comp fraud, welfare fraud, et cetera, et cetera, et cetera. So the importance of the determination. Under the Internal Revenue Code, which is IRC, an employer must withhold income, Social Security, and Medicare taxes from employees' wages. And it must match the withheld Social Security and Medicare taxes with employer funds. Under the Federal Unemployment Tax Act, which is FUTA, F-U-T-A, covered employers must pay a certain percentage based on each employee's wages to support federal and state unemployment insurance programs. Public sector employers are exempt. Public sector employers, government agencies. Government agencies are exempt from FUTA tax, but if you are a private employer, you are subject to FUTA tax. There are also many obligations for employers at the state and local level. Most states and many local governments also require income tax withholdings from employees' wages. All states require most employers to pay contributions based on their employees' earnings into state unemployment insurance funds from which unemployment compensation benefits are paid. So that is an employer-only tax. It's generally the first $7,000 of an employee's wages. You have to pay the federal unemployment tax. Now, if there is a reduction, then you might pay more than that, because you get a credit. If my memory's right, and we'll see as I'm reading, it's 5.4%, but you get a credit, and with the credit you pay 0.6%, 0.06%, I think, or 0.6 of that person's wages, which kind of works out to the first $7,000. But if there's a reduction, the reduction means if you have an excess amount of unemployment claims coming from your company, then there's an increased amount that you have to pay. You cannot make your employee pay that. That is an employer-only tax. So this is something, when you decide to be an employer, this is something that you're taking responsibility for. So it's not just paying the Medicare and Social Security tax. And you have to understand, if you're short and deducting Social Security and Medicare tax from your employee's check, you as the employer are responsible to be sure that the entire amount is paid, because the IRS is going to look at you, not the employee, because you are the one that's responsible for payroll. All states require employers to pay contributions based on their employees' earnings into state unemployment insurance funds from which unemployment compensation benefits are paid. 3 states also requires employees to withhold unemployment insurance taxes from employees' wages. I know off the top of my head, California is one of those states. New Jersey is one of those states, and I'm not sure who the third state is. State unemployment insurance is SUI, S-U-I. Several states require employers to withhold amounts from employees' wages to fund state disability insurance benefit payments and make contributions to the disability plan out of their own funds. I know California is one of them, and it's SDI, State Disability Insurance. I think New Jersey is another one, but I'm not 100% sure. A couple of states also require employee withholding to fund paid family leave benefits. I'm not sure what all those states are, and I think that is something that's a little newer from when I first got my CPP certification, which was in 2014 is when I first got my CPP. I renewed it once, and this third time, instead of doing the continuing education, I'm deciding to go and retake the exam because a lot has changed, and I want to test my knowledge so I can be abreast of everything that's changing. Most companies have their own list of benefits and other entitlements they provide to employees as well. And that means your retirement plans, vacation, sick pay, health insurance, etc. Employers are not required to provide some of these, which is considered fringe benefits. They do it because they want to make it appealing for employees to come work for them. So there's no requirement for your employer to contribute to your retirement plan or even offer you a retirement plan. There's no requirement for them to offer you vacation pay. Now, with a lot of state laws changing, a lot of requirements are in place on a state level for sick pay. And that all came about because of COVID. Employers are not required to provide you health insurance. That's also a fringe benefit. While this is not meant to be an exhaustive list of all the obligations that face an employer once the employer-employee relationship is established, it provides some idea of why the initial determination of a worker's status is so important and why many employers use workers who are not employees to perform services for them. But again, if you decide to go with a non-employee, which is a 1099 contractor, be sure you do the test and be sure that they are actually a 1099 contractor. You can't have a 1099 contractor and say, oh, I'm going to give you a computer to use. A 1099 contractor usually has all of their own stuff. Like if you asking them to fix a roof, you can't say, I'm going to provide your tools. That kind of, when the IRS looks at it, they'll say, oh, that's an employee because you provided the items they needed to complete the work. So, employee versus independent contractor, and that's what we're about to get into. Most of the problems employers have in regard to work classification arise when determining whether a worker is an employee or an independent contractor. Hey, Adolph! It is often much less expensive for a business to use independent contractors to provide services because the taxing and reporting requirements are much less costly than they are for employees. So long as the independent contractor provides the employer with a valid taxpayer identification number, TIN, the employer's only obligations are to give the contractor a Form 1099 NEC after the end of the year, stating how much the contractor was paid for the services rendered. If the total was at least $600, and to send a copy of the form to the Internal Revenue Service. So what that means is if you paid somebody $40, $50, $599, you do not need to give them a 1099 NEC. That the IRS said it has to be $600 or higher. Hey, Taylor, thank you, hon. And the reason that it's saying that it has to be $600 or higher is something to do with the Paperwork Reduction Act, because they don't want to have all these 1099s that they need to now go and look at, and it's like $20, $2, $5, $17, $109. Like they want it $600 or higher. Other than that, if it's a 1099 contractor, you are not obligated. So, something to watch out for. Several states have expanded their new hire reporting requirements to include reporting of independent contractors. We're going to go over this in section 1.9 of the new hire reporting requirements of individual states. If states to which an employer reports new hires require reporting of independent contractors, the accounts payable department must be notified to ensure compliance. And that's because new hire reporting is usually for your W-2 employees. Thank you. They usually are your W-2 employees, and generally most systems, payroll systems, when you put in your new employee information, there's an automatic workflow that will then take and report that information to whatever state it needs to report to. So say, for instance, if you have a business in Florida and you hire someone and they're working in Florida, but they're considered to be a resident of Maryland. Maryland does not have reciprocity with Florida. Florida doesn't have state tax. So Maryland still wants their tax. So you still have to report that employee to the state of Maryland because Maryland is their state of residence. Now, if they decide I'm not a resident of Maryland anymore, I just have like a summer house there, I'm a resident of Florida, you don't have to worry about reporting anything to Maryland. And we'll talk about state reciprocal agreements a little bit later. Social Security and Medicare taxes need not be withheld from an independent contractor's payments or paid by the employer. No federal or state unemployment insurance taxes are required, and employee benefits do not have to be funded, paid, or administered on their behalf, which is why a lot of people try to go around having someone as an employee simply because they don't want to pay all these extra taxes. So they was like, oh, if I just make them a 1099, they ain't got to pay none of this stuff. You a 1099. And then when they get audited and they're mad, they have to pay all this money. It's like, well, why didn't you do the test to confirm they were actually a 1099? lack of knowledge. So hopefully by me studying and sharing this knowledge with you all, it's helping you if you are an employer, if you are a contractor, or if you're considering opening a business and having employees. Hopefully this knowledge will help you understand some of those things that you need to take into account before you decide to jump off the ship. Because misclassification of workers as independent contractors rather than employees has led to substantial losses in revenue for the federal government and the failure to properly credit earnings for Social Security and unemployment benefit purposes, the IRS is focusing more resources on employment tax audits and on working with other federal and state agencies to discover instances of misclassification. Therefore, employers should be sure their human resources and payroll departments are familiar with the test for determining whether a new hire is an employee or an independent contractor. So, is there a test you can take to verify? Absolutely. Common law test. While there is no uniform definition of an employee under all payroll laws, most workers can be classified as either employees or independent contractors once the common law test has been applied. The IRS, for example, relies on the common law test in making worker status determinations for the purposes of federal income tax withholdings and the withholding and payment of employment, Social Security, Medicare, and federal unemployment taxes. Other tests and exceptions are discussed later in the section. Right to control is key. Do you have the right to control? So under the common law test, if the employer has the right to control what work will be done and how that work will be done, then an employee-employer relationship exists and the worker is a common law employee. So for a lot of these employers that are control freaks, ain't no way in hell you got a 1099 contractor because you want to control everything. So if you are a controlling employer and you want to tell someone how to do everything, when to come to work, you want to control all aspects of what they do, don't hire a 1099 contractor, because automatically your control that you want to have over everything makes that person an employee. So under the common law test, if the employer has the right to control what work will be done and how the work will be done, then an employer-employee relationship exists and the worker is a common law employee. So again, if you're a control freak and you want to say, I don't do it that way, do it this way. No, don't show up at this time. You have an employee. Don't you dare put a 1099 contractor on your payroll as a 1099 contractor. Okay? Because ain't no way in hell, because you want to control everything. Therefore, you have an employee. This is true regardless of whether the employer actually exercises the right on a regular basis. However, if an individual is subject to the control or direction of another only as it results to be accomplished and not as to the details by which those results are accomplished, the individual would not be an employee under the common law test. Break that down for you. If you want to tell someone how to do something and how to come to what the outcome is, that is an employee. But if you want to tell them this is what I need to be done and they can get it done through whatever measurements they decide, because there's more than one way to skin a cat, then that could be an independent contractor. But if you want to tell them, look, I want you to lay the bricks this way, and after you lay them this way, I want you to put this on it, and then after you do that, let it sit for 5 minutes and then put this on it. That is an employee. Now, if you say, look, I want this wall put up and I just need the wall to look like this and I need these dimensions X, Y, and Z, and you let them do it and they can lay the bricks and do everything the way they decide to do it, then that would be an independent contractor. Going back here, it makes no difference. It makes no difference what the worker is called by the employer. An agent or contractor is still an employee if the employer has the right to control the work to be done and the methods for accomplishing. Oh, look at me over here at 2000. Thank you. IRS looks to identify key control factors. So if you're audited by the IRS, that's what they're looking for when they're saying, hey, is this an independent contractor or is this a W-2 employee? And I always say a W-2 employee is an employee. That's why they get a W-2. A 1099 contractor, they are a contractor because they get a 1099. You're not taking any taxes or anything out. You're just paying them straight money. If you say, hey, I'm going to give you $1,000 to do this job, they get $1,000. Opposed to an employee, you might say, okay, I'm going to pay you $10 an hour. And once you work 100 hours, you have $1,000. But out of that $1,000, I need to take your FICA taxes and your federal income taxes out. So they might only walk home with $600. So that's another key difference between employee, employer, W-2 employee, 1099 contractor. IRS looks to identify key control factors. The IRS has sought to streamline the process for determining whether a worker is an employee or an independent contractor by identifying those factors that most clearly indicate the degree of control or independence in the relationship of the worker and the business. Evidence of the degree of control and independence can be grouped into three general types or categories. 1, behavior control. 2, financial control. And 3, the type of relationship between the parties. Behavior control, defined. Factors that determine behavior control, which is the right to direct and control the details and means by which the worker performs the work to be done, include, level of instructions the business gives the worker. Evidence that a worker is subject to detailed instructions about when, where, and how to work tends to show the worker is an employee. I'm going to say that again. Evidence that a worker is subject to detailed instructions about when, what time, where, at this location, how, do it this way, to work tends to show the worker is an employee. Even if no such instructions are given, the right to control through instructions may be sufficient evidence of employment status. The important thing is whether the business has the right to control the details of the worker's performance or has instead given up that right. Level of training provided to the worker. This is so important. An employment relationship is an indicator where the business provides periodic or ongoing training regarding particular procedures to be followed and methods to be used in performing the work. Independent contractors generally rely on their own methods. So if you have independent contractors and you keep telling them, we got training every Wednesday at 8 o'clock, and your expectation is for them to be there every Wednesday at 8 o'clock for the training, you have an employee that is not an independent contractor. Because independent contractors rely on their own methods. So if you're trying to train them on how to do it, that's an employee. Financial control. Factors that must be considered when determining whether the business has the right to direct and control the economic aspects of the worker's job includes whether the worker has unreimbursed business expenses. Independent contractors are more likely to have unreimbursed business expenses than employees. The IRS considers fixed ongoing costs that are incurred whether or not work is being performed as particularly important. However, employees may also have unreimbursed business expenses in connection with their employment. Now, an independent contractor, you do not reimburse them unless that's part of the contractual agreement. An employee, you would reimburse them. So generally, say an independent contractor, which is your 1099, you hire them to do a job, and let's say the job is in Washington, D.C. And they have to book a flight, and they need to stay at a hotel, and they need to get a rental car. If you tell them, send me the information and I'll reimburse you, that's the wrong thing. They should incorporate the cost of the flights, the hotel, and the rental car into whatever fee they are charging you to perform the service that you're asking them to perform. So whether the worker has a substantial investment in the work, while it is not required, independent contractors often have a significant financial investment in the facilities they use to perform services for a business. Employees usually don't. Whether the worker's services are available to the public. Evidence that the worker offers his or her services to the public at large. Business cards, phone listing, marketing material, meaning they have a business card, they have their own private phone listing, they have their own private marketing materials. Usually 1099 contractors fall in that category. Employees do not. Indicates independent contractor status. Although employees can work for more than one employer at a time. How the worker is paid. Hey, Tiffany. Employees generally are paid by the hour, week, or month, while independent contractors are usually paid by the job. However, some independent contractors, such as lawyers or accountants, are customarily paid by the hour. Whether the worker can realize a profit or incur a loss. All the financial evidence helps determine whether a worker has the opportunity to make a profit or suffer a loss. If so, independent contractor status is indicated. Now, if you're an employee, you ain't going to work for nobody and taking a loss. But as an independent contractor, you can take, say you bid on a job, and let's say you were thinking the job was going to cost $50,000. So you have this contractual agreement with a company. You say, okay, I'm going to do X, Y, and Z, and based on everything I'm doing, it's going to cost me $50,000. Well, I'm going to charge you $50,000, and it'll be complete by this date. Well, say you get close to that date and you realize, oh gosh, I'm going to mess up this contract, so now I need to bring some more people on, and you charge them $50,000, but you ended up paying $53,000 out of pocket. So now you're negative $3,000, but the negative $3,000 came from you needed to bring other people in to fulfill the contract. But you realize, hey, I'm gonna have to take this loss, but by me completing this job, I'm guaranteed to get more jobs. So it's kind of like you have to make that decision in your head. So that's another thing. Employees can never really have a loss, but a contractor, you can have a profit or a loss scenario. Type of relationship. Hey, Gwen. There are several factors that generally indicate how the worker and the business perceive their relationship to each other and their intent regarding the right to direct and control the manner and means of the worker's activities. These factors include whether there is a written agreement. A written contract may indicate the type of relationship the parties intended to create. And generally, if you're an independent contractor, you do want to have a contract. That way, if there's any issue with you getting your money, you have something in writing saying, this is what I agreed to do. This is the amount we agreed upon. And if you ever have to go to court, you have something in writing. It's because when you get into that, he say, she say, just don't do it. That's all I got to say. Whether employee type benefits are provided. If the business provides the worker with benefits usually provided to employees, such as paid vacations, health and life insurance, sick pay, or a retirement plan, an employment relationship is indicated. I had a client that I had to do an audit for him, and he was like, yeah, I have all 1099 contractors and I give everybody insurance. You know, they got health and dental insurance. And I said, well, you don't have 1099 contractors because you do not give independent contractors employee benefits unless they are an employee. So I had to really break down, and it was crazy because he had this whole finance business, and I'm like, how do you not know that these are independent contractors? And this is like, who helped you start your business? And he had been in business for a while. So that was one of the red flags. So if he ever gets audited, he's going to have to go back and pay Social Security and Medicare tax for all of those years that he had independent contractors, but he provided medical insurance and dental insurance to his 1099 contractors. So those are employees, but he was doing it so he wouldn't have to pay the FICA tax, the FUTA tax. He didn't want to pay all them taxes, but why are you giving them health benefits? Holding up the situation. So if you are giving an independent contractor any type of benefits, vacation time, health insurance, life insurance, anything, they're employees, and you need to go back and reclassify them. The term of the relationship. If a worker is hired with the expectation that the relationship will continue indefinitely rather than for a specific period or project, this is generally evidence that the intent was to create an employment relationship. So generally, you do not have independent contractors that work for you for an indefinite period. It's generally, okay, I'm gonna need you for 6 months. I'm gonna need you for 3 months. This is a 1-year contract. This is a 5-year contract. You cannot say, look, until it's done. That's considered to be an employee relationship. Whether the worker's services are an important aspect of the business's regular operations. If a worker provides services that make up a key aspect of the entity's regular business activity, it is likely that the business will have the right to direct and control the worker's activities, which means they are an employee, not an independent contractor. Hey, Sarah. Good morning to you. Some factors aren't important. Because of changes in the realities of the workplace over the years, the IRS has identified several factors which it feels are not important in making worker classification determinations. They include part-time or full-time work, the location of the work, and hours of work. Now, it used to be that, hey, if somebody had the option to work from home, they could be an independent contractor because you couldn't necessarily have that much control over what they're doing at home. But again, because of COVID, a lot of things have changed, which is why I decided to retake the exam so I can be sure I'm acclimated to all these different changes versus doing all of these different continuing education courses, because that's not going to cover everything. But me studying for the CPP exam and sitting for the exam again, instead of turning in my continuing education hours, which is CEUs, I feel like I'm gonna grab all of this new information that's available. So example 1, let's go into an example, okay? Diego is an experienced plumber who agreed to perform full-time services for the Building Group, Inc. at its construction sites. He uses his own tools and performs the work in the order designated by TBG, which is the Building Group, according to their specifications. TBG supplies all Diego's materials, frequently inspects his work, pays him on a piecework basis, and carries workers' compensation insurance on him. Just for me reading that, baby, that's an employee all day long. That's not an independent contractor. That's an employee. Diego does not advertise his services or hold himself out as available to perform similar services for other companies. Diego is an employee of TBG. Example 2. Rusty's Auto Sales, Inc. provides a garage with 2 bays and a lift for Diego to perform car repair services. Diego brings his own tools and supplies and does all of Rusty's body work and painting. Diego also solicits business from insurance, adjusters, and others. Diego hires his own helpers, can fire them for poor performance, and sets their work hours. He can determine the prices for work done and is compensated by a percentage of the gross revenue. It's sounding like an independent contractor from work done in the repair shop. Diego is also responsible for any collected charges. Diego is an independent contractor whose helpers are his employees, not those of Rusty's. Kumi. Example 3. Kumi, a computer programmer, loses her job after a layoff at Overbite, Inc. However, Overbite agrees to pay Kumi a flat amount to complete a one-time project to create a new product. The length of time for completion of the project is unclear, and there is no guaranteed minimum payment for the job. The only instructions Overbite gives Kumi are the project specifications. Sounding like an independent contractor so far. Kumi and Overbite agree in writing that Kumi is considered to be an independent contractor, is required to pay federal and state taxes, receives no benefits from Overbite, and will receive a Form 1099 NEC from Overbite. Kumi works at home and is not required or allowed to attend meetings of the software development group. Kumi is an independent contractor. And we're going to go into example 4. Example number 4 is Ann rents a taxi cab from Greenfield Cab Company for $150 per day. Ann pays the cost of maintaining and operating the cab, and she keeps all fares she receives from her riders. Sounds like an independent contractor to me, okay? Although she receives the benefit of Greenfield's radio communications equipment, dispatcher, and advertising, these items benefit both parties and is an independent contractor. So, managers are employees too. Federal payroll tax laws apply to all levels of employees, including supervisors, managers, and executives. Hey, Smith, William. A corporation's officers as well are generally covered unless they perform only minor services and neither receive nor are entitled to any compensation. Keep in mind, however, that managerial employees are most likely exempt from coverage under other employment-related laws, such as Fair Labor Standards Act, which is FSLA, which has to do with federal minimum wage, right? Overtime payment. Like if you work over 40 hours a week, then you have to get paid time and a half. Usually if you're in management, you're exempt from that. And the National Labor Relations Act. Members of a corporation's board of directors are not employees of the corporation with respect to services performed as a director. Length of employment makes no difference. So long as an individual meets the common law test for employment status, a part-time or temporary employee is covered under the federal payroll tax laws. The number of hours a day's work makes no difference. So if you want to say, well, they only work 4 hours a week, you can't make no independent contractor because they work 4 hours a week. It all goes back to the control portion. If you have control over what they do, how they do it, what time they show up, what time they leave, all of that is an employee. Point blank, period. So, example 5, Rose, a proofreader and copy editor, works on a part-time basis for Book Jacket Ltd. On their premises and is paid by the page. Her work is reviewed by a production editor, and she can be discharged or can quit at any time. She also works for other publishers as time permits, since her hours at Book Jacket vary greatly. Rose is an employee of Book Jacket, although she may be an employee or independent contractor in her other jobs, depending on the circumstances. Worker can be both an employee and an independent contractor. In 2012, the IRS Office of Chief Counsel released a letter in response to an inquiry about whether a person can be an employee and an independent contractor simultaneously for the same company when working as a professional consultant on 2 separate consulting projects. The letter says that an individual can be an employee and an independent contractor, and that each job performed by the individual will be examined separately. If an employer-employee relationship is found with regard to only one role, then remuneration, which is payment, for only those specific services is subject to federal income, Social Security, and Medicare tax withholding. The U.S. Tax Court ruled that fees paid to a radio personality for promotional services were earned by him as an independent contractor for work done for his sponsors and were not wages paid by the radio station that employed him. I think that's a perfect example. So the IRS offers some help, has issued a fact sheet on employment taxes and classifying workers to help businesses better understand worker classification issues, including the common misconception that someone working part-time or earning less than $600 per year should be classified as an independent contractor. The fact sheet also broadly outlines the factors IRS considers when determining a worker's classification and the business's tax obligations if it does have employees. Additional guidance is provided in the IRS fact sheet on understanding employee versus contractor designation. IRS also created publication 5520-5520, which is a one-page flyer outlining the factors that must be considered when determining whether a worker is an employee or an independent contractor, and provides a link to more detailed information on its website. So we're going to go over this really quick, just to recap. Determining whether the individuals providing services are employees or independent contractors. Before you can determine how to treat payments you make for services, you must first know the business relationship, hey Quiet Storm, that exists between you and the person performing the services. So the person performing the services can be an independent contractor, an employee, a statutory employee, a statutory non-employee, or a government worker. There are common law rules. So facts that provide evidence of the degree of control and independence fall into three categories. Behavioral: does the company control or have the right to control what the worker does and how the worker does his or her job? Financial: are the business aspects of the worker's job controlled by the payer? These include things like how worker is paid, whether expenses are reimbursed, who provides tools and supplies, and the type of relationship. Are there written contracts or employee type benefits, that is pension plan, insurance, vacation pay, etc.? Will the relationship continue, and is the work performed a key aspect of the business? Now, a remote worker, an individual working remotely, for example, performing services for you from a location other than an office operated by you, is your employee under the common law rules, if you can control what will be done and how it will be done. This is so even if the worker can choose to work remotely, what matters is that you have the right to control the details of how the services are performed. If the remote worker is a U.S. citizen or resident alien employed outside of the United States by an American employer, there's different things that you have to review to confirm additional information, such as federal income tax withholdings for people that are abroad, Social Security and Medicare tax for U.S. citizens and resident aliens employed abroad, and U.S. citizen and resident aliens employed abroad, the federal unemployment tax. If you classify an employee as an independent contractor and you have no reasonable basis for doing so, then you may be held liable for employment taxes for that worker. Relief provisions: if you have a reasonable basis for not treating a worker as an employee, then you may be relieved from having to pay employment taxes for that worker. To get this relief, you must file all required federal information returns on a basis consistent with your treatment of the worker. Misclassified workers can file Social Security tax forms. And then you have a voluntary classification settlement program. And this is an optional program that provides taxpayers with an opportunity to reclassify their workers as employees for future tax periods for employment tax purposes, with partial relief from federal employment taxes for eligible taxpayers that agree to prospectively treat their workers or a class or group of workers as employees. So that information that I just gave you was directly from the IRS website. We have just went over the very first part of the CPP Certified Payroll Professional exam, where we went over the employee versus independent contractor, and we discussed the common law test and the reasonable basis test. I'm going to end the live over here on YouTube because I don't want to convolute everything. TikTok, y'all just stay with me. I'm going to reset the live over on YouTube only. So thank you all for joining. I hope you found value in the information, and stay tuned as we come back and continue studying for the CPP exam.